on the breakout. Gold's going to make a new all-time highs.
Gold-backed ETFs seen inflows of over $5 billion.
$0.8 trillion gold market.
Why are we the only guys that seem to understand this?
Makes your head spin. Hi, everyone. This is Shane Moran, and welcome to Live from the Vault. Of course, we've got news happening in the precious metals market. And just before we get started here with Andrew Maguire in the UK, please subscribe and share this link with everyone you know. Timing is awesome. And we're going to go right to Talking Gold with Andrew Maguire. Welcome.
Yeah, Shane. And, you know, this is an impromptu one, of course. Normally we would have come again next week, but this is too important. So we thought we'd better come in and really have a good look at what's going on.
Yeah, there's a lot of shaking happen in the market. My phone is ringing off the hook. Of course, I'm no financial advisor. That's not my area. I'm more of a fan and not a spectator, but maybe a player. But we're hearing all of a sudden this GameStop short squeeze, and that seemed to have that movement has seemed to have, or appears to be moving over into the silver kind of short squeeze. Maybe, Andrew, we can start off here by just from where you're sitting. What are you seeing? What's happening now in the market?
Yeah, and Shane, you're right. I mean, the phones have been off the hook, emails flying in, a lot of questions. And look, you know, welcome everybody, because it's we feel this is important. So I just want to make sure you're getting this in a timely manner. Look, this is a pivotal time for all the markets. And what we're seeing right now is just unprecedented. So we thought it would be a good idea to look at what this means, and not just for gold and silver, but for the wider market, because obviously gold and silver operate within this wider market. So now what we're seeing is that the Reddit WallStreetBets traders are pushing back against embedded Wall Street hedge and quant funds. Now, this last few sessions, if you look at the charts, clearly inflicting severe damage to the fund models. Now, these Reddit trades are clearly selected by some very sophisticated entities, really likely coming from the gaming space, targeting very vulnerable short-long imbalances held by elite billionaire funds. So these are not just people who've just happened to have come together. Now, these multi-billion-dollar institutional funds have really historically operated in a very siloed convention of calculable metrics. So, in other words, agreed by an elite group of people. And they were really not prepared for this out-of-the-blue, massive, meme-driven opposition. Now, billions, if not trillions, I mean, it could easily be trillions, of leveraged bets are still vulnerable to a fresh swarm of these meme-driven raptors. I call them raptors. And if they're well organized by sheer volume of aggregated size, they'll be able to run all over the numerical logic of these quant structures, which are very, very, as I say, they're very, very well structured, and they've been structured through algorithms over the years, but not accounting for a short squeeze. Now, what's really scaring Wall Street insiders is that there's a passion behind this movement to take on the fat cat insiders running the rigged against the small guy Wall Street casino. And we've seen that in the gold and silver markets, but by crikey, this is beginning to spill into Wall Street. And this is a major wake-up call for insiders who do not welcome a light shone into what are billions of dollars of bearishly skewed, potentially vulnerable bets. Also, that lifts the lid on the anonymity of dark pool block trades. And that disrupts a very large self-serving conflict of interest, which have been able to hide in a kind of a smoke and mirrors world. And even though really these pools have operated sanctioned by officials, they really ought not to be in many respects, because they are self-serving to a large degree. Now, anything that's in the dark really needs highlighting. Now, the dust, of course, it hasn't settled here. In fact, the storm is just beginning. Just look at your charts. And this is undoubtedly will change the Wall Street game forever. Now, this is primarily because once the herd learns more about how markets really work, they're going to learn to hunt out lopsided position illiquidity and ultimately learn to arbitrage them to par. And as a direct result, this is also going to impact how insiders' positions in gold and silver derivatives, with a particular focus on one of the K-Bal's tools, which is, of course, naked shorting silver and gold stocks and indexes.
Wow. So Andrew, how is all of this going to affect specifically the gold and silver markets as we move forward?
Yeah, Shane, that's perfect. I mean, this brings us right into gold and silver. And silver's now come into the crosshairs of the Reddit meme traders. And really, although this has primarily been the focus on attacking derivative silver positions, this still actually poses a major threat to the house insiders' concentrated silver futures positions, and who have for years disruptively dumped in synthetic silver supply, tricked out speculators, and stealthily gone long physical at the spec's expense. That's been the game. And we're 100% certain that insiders are filling their boots, and from a wholesale market perspective, I can absolutely attest to it. They're filling their boots with all the physical silver they can, and they are very busy taking delivery of all the physical silver globally on offer, which is deep below physical supply demand fair value prices. Now, so to achieve this, COMEX market making insiders operate as a K-Bal of bankers, utilizing, really, when you aggregate it, billions of dollars of futures market position concentration to loan and loan this margin, loan these loans, and take the short side of the spec longs who've taken on these positions which they've borrowed from this K-Bal. The view is, of course, to jointly call in these margins or these loans the moment they're sufficiently expended or extended or vulnerable. Don't forget that when you're a market maker and you share information with each other, of course they do, then you know roughly where you can see the visible book you have on these loans. You can aggregate very, very quickly where the pain levels are. So as these speculators have historically never stood for physical delivery of these borrowed long positions, igniting a coordinated, well-timed price smash into known financial pain thresholds, it forces these longs to capitulate and enabling the house traders to steal back the paper positions from these speculators and square them for a profit. What a lovely game, eh? Really? Then to add insult to injury, I mean, this is an injury it is, and because this can affect producers, and this can affect real lives. They use these ill-gained profits to buy deeply discounted physical silver for their own books. And this has been the COMEX game since its inception 50 years ago. And now this multi-decade rigged game is actually under attack. So really, to kind of summarize, there is no first-tier bullion bank that is naked short gold or silver for their own book. But by acting in unison, house insiders exchange trading information, and they use the power of position concentration, aggregated position concentration, to short against their physical positions, but then they are further diluted by paper-long leveraged hedges in the over-the-counter foreign exchange silver market. So, and obviously traders know this, but just for reference here, the over-the-counter markets are 10 times the size of the COMEX. And they're really, because silver and gold, let's not forget, are currencies and actually trade as a currency cross in the foreign exchange market. So when the shills scramble to fill the media slots to talk down silver, saying, as I saw today, I think I saw two this morning, saying there's an oversupply and all positions are fully hedged. Well, what they're doing is purposely ignoring the degree of massive market-making counterparty risk. The problem these insiders are currently experiencing is if the price continues to rise, is that if they cannot rig a sell-off, then they are exposed to delivering physical from their own inventory. Now that's not going to happen, guys. They are way too busy buying up all the cheap physical silver they can, so deep below what they know is fair value. And we have been tracking recent accumulations of physical silver really closely in the wholesale markets. And it's evidencing these same COMEX insiders draining all the refiner outputs globally.
Well, Andrew, I'm fired up here listening to you. I'm sure all the viewers are just pretty excited about what they're feeling and what they're sensing. I just want to ask you a quick question here, because as I'm going through all kinds of different information, I'm sure a lot of our viewers are getting information from all kinds of sources. But this group that was on Reddit, evidently they're going and they're saying buy SLV, buy SLV. Now, I'm a physical fan, physical gold, physical silver. Let's say I bought SLV and the price continues to go up. It continues to go up. And all of a sudden I decide, you know what? Can I pick up the phone and say, give me my silver? Would they deliver it to me? How does that work? Maybe you can explain it to the people who are out there in this enthusiasm buying maybe SLV.
Okay, the simple answer, no, you cannot take delivery. Well, not unless you're an authorized participant or you work through an authorized participant. Now, problem with SLV or GLD for that matter, the ETFs, is that the on and off ramps are actually unallocated. They are not, that's not allocated silver going into or out of the SLV vault. So what happens is, and let's just leave the question of the doubtful question that any of this unallocated silver ever gets allocated in the vault. As you see 600 tons coming in a day, it's just not logistically possible to bring that much in and count it in and aggregate it. Plus, we also I think we've discussed in previous Live in the Vault episodes how how there's no, if you get the SLV, I challenge anyone, go to SLV, the SLV, try and pull the list of the bar list. I think there is 5,800 pages or something. Well, something like that. But none of it is searchable. And why would that be? Why would you not be able to? Because when we as wholesalers take a delivery of a silver bar, we want to know if it is actually titled to us. So you pull up, and especially as we're getting sometimes wholesale silver at JP Morgan or out of London, as that comes through, and you've got a few tons coming in at a time, you want to be sure that every single bar is not, hasn't got another claim on it. And so you cannot even search that. So, I mean, there's the answer. Of course, there must be a PDF. There must be something that's searchable, but it's not available to anyone. So that really has, I mean, it should have any accountant's red flag screaming. And I would challenge the Reddit guys to form some sort of group and come after SLV and demand, where is the bar list? Where is a searchable bar list? Where can we see these actual bar numbers? So, I mean, that's just aside from that. But so now that you know the on and off ramps are unallocated, so then that means that if you were big enough to take delivery of SLV and you then would go through an authorized participant and you would then receive, what will you receive? Unallocated silver. You then got to go to the market and buy that. Good luck with that at this price. And the SLB gets fixed at the spot price set in the market. Is silver buyable at that price? No. So essentially, all you're ending up with is another unallocated position that you've then got to go to, you get it in your hands. You're now kind of spot indexed to the price, but then you've got to go and find someone that's going to sell it to you. And that's going to come at a big premium. So, essentially, as we're talking about SLV, I would say what is perhaps helpful at this point is that now SLV obviously is hugely liquid. So it's not like shorting GameStop or one of those or a stock. It's very liquid, and there's some bad actors involved in there, and they've got big pockets. But by trading the options, I think by actually buying the options and holding those options, you know your risk. You're not going to lose more than you've paid for the option. And there's enough people coming through and buying those options, then you're going to see, as we've already seen, some of the options resistance levels. When we analyze the options structures, we're seeing some of those options resistance level starting to cave. So yes, there is maybe a cause to be on the derivative side, but really no, silver. But really, we're kind of talking about these insiders, and we mentioned these insiders are going out and buying physical for their own book. Look, if you remember, gosh, I think it was probably live from the vault episode 2-3 months ago. It's one of them. And as we identified, in the race to secure physical silver at these deeply discounted prices, we identified several house insiders. These are the bad actors too, stepping up efforts to accrue physical. And that is severely tightening the wholesale supply. Now, we see that as wholesalers. Now, most recently, as we announced in this Live from the Vault episode, we discovered that Indian-owned Standard Chartered Bank had also began competing aggressively with JP Morgan, which everyone knows is the whale, to obtain physical silver for their own book, i.e. compete. Now, it was really interesting to see that this buyer was going so far as to hunt out obscure non-US and European producers and refineries, and going to a location I don't wish to discuss because that's an area we go to, and booking all the next year's silver allocations they were able to secure, thereby cutting us and many other people's. So to illustrate just how tight physical silver supply is, we evidenced this bank locking in extremely large premiums over spot, while additionally incurring very large transportation friction on top of that. So adding to the costs, obviously, for shipping to the US COMEX bullion vaults located within a 150-mile radius of New York. So that's a huge cost. That's not normal to be locking in those kind of premiums over spot. And basically, as these orders come due, that doesn't mean to say you've locked in a price. It means that unless you've done that on your own in the market, what it means is you've then got to go and lock in that price over spot at the time it comes out of the refinery. Now, so what we're saying is, albeit indirectly, and I want to be careful here because I'm not recommending delving into the derivatives markets, but SI futures speculators have really received an army of fresh support. Now, this may be at first push, it may appear to have a relatively short shelf life, and I'm sure as hell all the shills that are appearing on the media are saying it might have a short shelf life. And indeed, we've evidenced some pushbacks, and we still expect a fight. Come on, guys. But the structural upside damage to the insiders is underway. I can guarantee that. And really, we historically, these insiders, they've been able to take the short side of the paper longs with absolute impunity. Secure in the knowledge, the house, like any casino, because it is a casino, knows the pain level of the specs who borrowed longs sitting on their books, as we said. So, however, the sudden tidal wave of thousands of individually held meme-driven fresh options, ETFs, stock longs, make it really difficult for the house to know where the specs futures pain trigger point is, which is pretty unusual. They're not used to having a more level playing field here. And such a large, diverse swarm of buy flow streaming in from multiple brokers, seeking thousands of tons of leveraged long options and derivative bets, and that targeting an array of really very overshorted precious metal stocks and indexes, that spooks market makers. And we also may see some brokers exit this space. Now, a lot of people have been around long enough to know there's been a couple of major broker failures in the past. And so be aware that sometimes, and I'm talking about a few years ago, and a lot of people lost a lot of money. But so be careful and make sure that your broker has the wherewithal to handle those positions that you're in. Now, this has become a game, really, though, when we're talking about it, of who blinks first. And it threatens to take the lid off the entire silver capping manipulation process. Well, of course, being a silver whistleblower and being behind the whole trying to expose this entire charade for years, this makes me very, very happy, and I really appreciate these efforts that the Reddit guys are making. But it's important to know that if a COMEX insider is caught short without being able to ring the register and square these short positions in the futures markets, that puts him right in the crosshairs for a physical delivery obligation into a starved, underpriced physical market. Now, even though these short positions are initially represented by just bullion warrants, because that's how the COMEX operates, really essentially nothing. It really, bullion moves from one side of the COMEX, the blue line on the center of the COMEX vault, it moves from one side to the other, never exits. This is a shuffle of bullion warrants. And these warrants are deeply underpriced relative to the global market, starved for physical deliverable bullion. And that's what actually puts this short squeeze, gives this short squeeze a little bit of ignition. And every single first tier bank we've spoken to is carrying physical silver on their own book. And why? Because there's a consensus that is, from a supply demand perspective, physical silver is priced tens, if not hundreds of dollars below fair market value. Who knows the price? It's sure as hell a hell of a lot higher than this surprise price that we've endured. Now, if these silver warrants are priced below, this is the key though, if they're priced below the rising physical silver price, it's going to expose the house insiders who shorted silver to having to deliver precious physical bullion backing up these shorts. And that's what I'm hoping is going to happen here. Now, insiders do not want to deliver you their silver. I guarantee you that. The only solution is to let the paper price rise in lieu of giving you this. And I've noticed that all day today, right from the early morning, as we saw silver move up into 30, we saw the contango, i.e. the futures priced 50 cents, over 50 cents higher than the spot price. And bear in mind, the spot market is 10 times larger than the COMEX price. So that kind of gives you some information there that these guys do not want to discount their physical. However, 50 cents plus the transportation costs, excuse me, if you can't get your physical and you know that the COMEX has it, or they purport to have it, and if you look at their registered inventories, I don't care how many times it's rehypothecated, if you demand delivery, you will get it. And I'm suggesting that that is exactly what people do. Go and demand, absolutely demand physical delivery from the COMEX. Now, you obviously, if you're trading, a 5,000 ounce contract, then obviously you need the money to do that. So really what we're saying, there's a potential tidal wave of silver demand coming in, and it poses a massive delivery risk to insiders, which is bound to evidence some initial pushbacks, but we're seeing that a little bit here. But changing risk reward metrics are going to disincentivize naked short selling in silver and gold. That's what you guys are doing for us. And very short term, as we assessed in live into the last Thursday's excitement in GC futures. GC is futures gold, SI is futures silver. The out of the blue spike higher last Thursday was triggered by a slew of unanticipated Reddit WallStreetBet memes buying silver options and indexes and spooking sleeping shorts in silver. Now this is actually now turning into something much, much, much bigger. Now these memes will likely continue to swarm over the likes of, say, First Majestic, many other well shorted related silver stocks, which in turn weakens the insiders' hold they've had in weighing on the gold and silver stock index lever, which has been historically has been an important component of their officially sanctioned price capping strategy. Now, the upsurge of fresh, long open interest, that futures open interest and options open interest will ultimately bullishly dislodge a much larger and more liquid gold futures and silver futures price capping anchor. Now, these anchors have been relied upon to maintain the casino's 95% win metric. Like any casino, you win 5% of the time, they win 95% of the time. That's what it's rigged to be.
Andy, it seems like we're in for some exciting times in this market, and it almost seems like we're upside down here. First of all, this is not our regular call schedule, number one. And normally on Talking Gold, we're talking gold, and we'll mention silver. This has been mostly about silver, but maybe as we wrap up here, you can talk a little bit about what you're seeing in the gold market.
Yeah, I mean, gold futures. Now, that bear in mind that gold is managed very much by Bank of International Settlements, by officials. It's the direct competitor to the dollar. Don't forget it. Rate trades as a foreign exchange cross. So if you're long gold, you're short the dollar. If you're long the dollar, you're short gold. So essentially, that's why it's sort of so big in the foreign exchange market. But they're being dragged up higher though by a relentless swarm of silver buyers, which in turn forced very strong bullish for gold arbitrage flows, because you've got the ratio trade between silver and gold. We're seeing that ratio trade collapse, which is bullish for silver, but it's also bullish for gold, because these guys are there is a metric that has to be maintained. And as we discussed in last week's Live from the Vault episode, which is still available on the Kinesis website, there's a scramble to cover off as many unallocated gold contracts as possible related to Basel III. And I really want, if you don't understand the implications of a Basel III, it's really important you understand them, because there's going to be a scramble to cover. And undoubtedly, the efforts to cap gold and to smack gold down was related to that endeavor. So the Reddit short squeeze is adding to a perfect storm for gold as well, and albeit dragged higher at the moment. Now, gold and silver has been coiling for a large move after being counterintuitively monkey hammered into large size speculative long short cover that had built, if you remember, December the 15th through January the 6th, there was most traders were actually either at the Hamptons or on holiday. It was very thin liquidity. And we saw a rise in the gold and silver price from December the 15th, when things were thin, all the way to January the 6th, then it was monkey hammered down. Why? By the Bank of International Settlements, who needed to square about $1 trillion worth of gold derivatives last Friday. Now, however, as we've also noted, by doing this, insiders drained the reservoir of possible speculative short cover. This is really important, because if you've got nothing to cover into, then really, how far can you push it? So it leaves very little to cover into without digging a deeper hole. And this is where we were as that Thursday meme trade commenced. And now these specs actually have a tailwind, which is unprecedented, because I've always warned, don't play that game because you're part of the problem. But starting to get a tailwind here, but I'm not for 1 second suggesting anyone buy or sell anything. What I'm saying here is be aware that the futures markets are highly rigged. And if you haven't got the margin to back it up, then rather stick to options or something where you know what's your maximum you can lose, but it still applies strong pressure on the market makers. So, but looking at the structure as of today, the upside profits in silver are still off the scale, not just for the March contract, which comes due later this month in February, but the options structure further out is evidencing some bearish bets unwinding. Now, on Friday, a swarm, this is the last data we really got on that, a swarm of bullish call bets were made through into the 30s. Now, these were not institutional bets. It's really clear they weren't. So it will be difficult to apply the usual formula to dislocate these positions. Now, this is unprecedented. And as bets like this are rigged to never close in the money usually, and as as we've just mentioned, options market makers are getting very, very nervous and unlikely to skew bets against them with a market that's coming against them already, which is a bit what people have done, a bit like what people have done in GameStop. So on the back of this recent Wall Street Bets backlash against the traders shorting GameStop and stocks and other stocks, the Reddit community are targeting silver to push back against the corruptive practices that is so evident in the markets. And people are now waking up and beginning to see right through this smoke and mirrors world. And it's not just about money though. And this is what's so interesting to me. It's a much larger move to exchange rapidly debasing fiat money into real money. And gold and silver, I mean, are real money. So pullbacks will be nothing but a gift. Now, this is a huge opportunity here with a surge in demand for physical silver. And in fact, online communities are complaining, though, about not being able to buy enough silver. And that has been an issue. So my suggestion into winning this mammoth game, this is a game-changing silver battle, don't margin yourself, buy physical bullion wherever you can, and continue to drain global silver supply at, and I would have to really underline this, at current paper diluted prices. It will not be at paper diluted prices if this Reddit move continues, and I believe it will. However, as of this morning, I know obviously tremendous amount of calls, a lot of retail, and we don't deal on the retail side ourselves, but as of this morning, we see the retail silver market very, very tight, if not impossible to secure silver for sale at anywhere close to wholesale prices. So you might be seeing, 10, 12 bucks higher. You might be seeing 40 bucks. I don't know. But I mean, obviously, there's a price where somebody's not going to sell it, will sell it to you, and there's a price that they're just not. And so if you wish to pay a premium, even if it's 40 bucks silver, look, it's cheap actually in the big picture if you think about it. However, if you want to obtain physical silver gold at a wholesale price, I will steer you to Kinesis. It has billions of dollars of wholesale physical silver liquidity available right now. Now, whereas US retail supply is extremely tight, and with and not many people realize, but with airline traffic limited, silver does not travel on flights anymore. We used to put 20 tons on the flight and it'd be done. It'd be there in days. This is going by ship. Silver is no longer delivered by airline, and it has to be shipped, as I say, by sea. And it will take weeks to restore silver prices anywhere close to the wholesale spot price. So if you can lock it in and you've got a supplier that you like, great, do it. But however, through this relationship with the allocated bullion exchange, which is the sister company of Kinesis, Kinesis is able to access 7 global vaults to fulfill orders for physical silver delivery. Now, wholesale physical silver is made available digitally through the blockchain, so it can be tracked, and everything is one-to-one allocated, insured, titled to you, and is fully redeemable. So in my opinion, the way to benefit from a rising physical price and be well insulated from Wall Street games is to buy physical in any form you can access.
I highly recommend that you, again, subscribe here. We're going to bring you up to date. Andy, if there is more breaking news this week, can we maybe jump on another call if there's more to come out?
Oh, absolutely. And as I say, this is the reason for this impromptu call today, because it's so important. And I really wanted to thank this move by some very, very smart people. And as I say, I think one of the things that I mentioned earlier, which is really important to me, it's that there's a passion behind this movement. I've read some stories on Reddit where people are saying, my family's lost this, my family's lost that, Wall Street has screwed us, my father's company was taken down there. You get all these stories. And in fact, I remember not that many years ago when there was a company that had 1 million shares outstanding and 10 million shares were out on short, drove it into zero, and the company went down and fired their employees. I mean, these stories anger me. And of course, silver, the story with silver that we discussed, and in fact, if you ever want to look at a good story on gold and silver, Kinesis has many, but there's a documentary called The Secret Life of Gold, and I walk the film crew through a multi-billion-dollar silver smash in detail, and how it's done, etc., and how we then gave evidence to the regulators of 88 examples of where gold and silver would fix the next day, bank robberies undergoing, and how it's taken so many years before we start to see some of these guys actually getting charged. But none of them have done any jail time yet, which amazes me. So, hey, one thing I always said when I walked out of the DOJ was, one day the physical market is going to run over this game. And I see this as a potential here. So guys, keep it up. That's all I will say.
Awesome. Well, Andy, every time I hear that story, I think of, what you went through to expose this. And that's back 10 or 12 years ago. And when I think about this, I'm going, yeah, that was 10 or 12 years ago. There was no solution for this massive problem. Guess what? There is right now. There's a solution to this. And I believe it's Kinesis. That's just my belief. I love it. It's a monetary system. It's not a coin. It's a monetary system. And I'm excited. Thank you so much for joining us again. And we look forward to our next call. Thanks so much, Andy.
And thank everybody for joining us.
Thank you so much. Okay. Don't forget to like, share, subscribe, hit the like button, the bell. You know what to do. Bye for now.